Hello, Oracles. Welcome to our Friday Night Live. We are welcomed here by David, aka Real Futurist, and Lee from Tesla Economist. Welcome, gentlemen. How are you this evening?
Wonderful. Yeah, excited to be here.
Awesome. And,
Good.
and
Yeah.
Lee, it's not even evening for you, Lee. What is it? Noon there?
Yeah, we're 12 o'clock. Yeah, PM.
Nice. Cool. So today, guys, we are going to be talking about Tesla's demand for 2023. So obviously, there's been a lot of questions about demand in China. How is that going? What are we going to be looking like for 2023 with the EV tax credit? How is demand going to look in Europe with the economy across the world being in a potential recession? How is demand going to look? So we'll dive into that. And I know, Dave, you had a great thread about that on Twitter. So let's dive right into that. What do you think we're going to be seeing for demand on the good side and bad side for Tesla in 2023?
Yeah, and I'm excited actually to hear a lot about what Lee has to say about this because I know in the last passing several days he's been kind of getting excited about how the demand might play out in 2023. So I'll just start by listing kind of the things that I'm looking at that for whatever reason I don't think are getting enough play, even in the Tesla YouTube community. Which is interesting. I see some comments here and there, but no no case being built with all these things incorporated for what demand could possibly look like. And all of this, of course, is set on the backdrop of the macro environment and potentially, as Elon just mentioned today in his comment to Kathy Wood, a pretty terrible, financial crisis, recession type scenario. All that being considered, I think the first important thing to take into account is that people will still be buying cars. I think that's an important just assumption right off the bat. That being said, during the great financial crisis, car buying in 2005 in 2005, it was 16 million cars. And then I think in 2008, 2009, it dropped down to 10 million. So that's a pretty substantial, greater than 30 something percent drop in vehicle purchases. But all of that being assumed and that might be the case coming in 2023, looking specifically at how that could impact Tesla, I think some things that should be taken into account are, one, Tesla's pricing power and how it would impact Tesla to reduce prices even marginally. And I think it's important to recognize that it's not a one for one, like a 1% drop in price equals a 1% increase in demand. It's actually it can be significantly higher. So a 10% reduction in price could end up being like a 50% increase in demand for a model vehicle. So I think that's important to keep in mind as well. So when we're talking about pricing power and we're looking at 2023, I don't think it's necessarily great to just look at where we're at right now, but to look at where we're going to be. Like Wayne Gretzky says, look at where the puck's going to be and skate to that spot, not skate to where the puck's at. That's a hockey thing, Lee. I don't know if you guys have that in New Zealand.
I know hockey.
Okay.
So we've got Austin and Berlin ramping. And as these factories ramp, and volume increases, you're going to see margins increase because with the increase of volume, you get a reduction in cost to produce your product. So that could be a margin tailwind, number one. Two, and Elon's already mentioned this, he's already seen commodity prices dropping. And we've seen, if anyone's been paying attention to the macro or watching any of the Fed stuff, you're seeing the commodity prices dropping even more so than the CPI would lead you to believe. So a lot of these commodity prices that Tesla is paying to build their vehicles are dropping. So as that continues to happen, that will also be a margin tailwind. In addition to that, you've got the IRA, which is starting here in January, which is going to provide a $7,500 incentive to people purchasing a Tesla. So right off the bat, if you didn't take anything else into account and just looked at the IRA coming out in January, the increase of demand would be pretty substantial if there was nothing else on the table. Just looking at, oh, wow, I can get a Tesla for $7,500 cheaper than I could before. Well, now you're looking at a significant increase in potential demand.
So now one thing too, Dave, and Caleb mentioned it here is, for those of you guys who don't know, 2023, the $7,500 is a tax credit. So it's not a rebate coming off of the vehicle. It is going to be coming off the vehicle in 2024. So we might actually see a very similar situation that's going on now with kind of delayed demand. Might see that again at the end of 2023 with people waiting to get that actual rebate versus just a tax credit. But it is still going to be a tax credit, which is going to be a benefit and a bump to demand.
Yeah, 100%. And like you said, that there might be a lag in the way the demand plays out, where people are pushing their orders towards the end of the year, so that that massive expenditure, the amount of time they're out, that $7,500 will be a shorter window of time. But that still will play out into 2023. So I think you're also seeing right now, people are talking about wait times dropping. And there's, let's see, his name's James. He's got a cat for his Twitter picture, and I can't remember his Twitter handle. But he did a long post about how dropping wait times is not necessarily the great bear argument that people think it is, but could actually be a bull argument, and talked about how the increase in supply provided by China ramping and increasing 30% on their production capacity, Berlin and Austin. What you're seeing is really Tesla's able to meet demand much better, which frankly, I think if you don't have to wait 6 months for a vehicle or even 6 weeks for a vehicle, you're more likely to buy vehicles. And I know people personally that haven't bought a Tesla because they didn't want to wait, who now would be people that would be buying Teslas because they're not going to have to wait. So you're going to see that incremental increase in demand as well. There's a lot of talk about losing customers because of the Twitter mess, and your target audience isn't going to be buying these vehicles anymore. And it may not be one for one, but for the customers you lose on one side, I think you're going to be gaining customers on the other. They're going to be also as adamant and vehement about purchasing vehicles to support whatever crazy political side they're on. So you've got that as well. And then also, as Elon mentioned today, about the fact that there could be a really tough financial circumstance in 2023 due to collapsing values in used vehicles as it relates to the loans that are out there on all these used vehicles and potentially massive repossessions happening on vehicles. That's way less likely to impact Tesla than it is these larger car companies that have got, first of all, a much larger inventory of vehicles that are out on the market because they've been around longer, and they're frankly they're selling higher volumes of vehicles like Toyota, so they've got more of a burden in that capacity. And then additionally, if you look at leases, which would be some of the repo situations, people that are coming off of leases and they can't buy other vehicles. If you look at leases, 5% of Tesla's vehicles are leased, and the average in the US is 17% of vehicles are leased. So Tesla's got less of an exposure on their leased vehicles as well, which is an additional benefit. And I think that the averages on leases are even higher in some overseas countries.
Lee, hold on a second. Lee, did you get your vehicle yet? I know you've been waiting on it for a while.
Well, I got my my Model 3 Performance end of last year, and I've had that since then. And I bought my wife a rear-wheel drive version. But I was literally the first person to order a Model S Plaid in this country, and that's still probably 2 years away. Okay. So that's the one I'm really waiting for. But I love my Model 3 Performance. It's been like the best thing I've ever had in my life. The most fun thing I've ever bought. So yeah, it's just so much fun. It's absolutely incredible, and I love everything about it. It's just an amazing product.
Nice. Now, do you have the option to lease over there in New Zealand?
I don't believe so. It's not really a bigger thing here. Yeah,
okay.
Yeah.
All right. Yeah, I wasn't sure how that worked in the other countries because as Dave is saying here with leases, obviously it doesn't seem like it's going to be a big issue anyway because it's small volume. But I didn't know globally how that worked.
I think a lot of the deals in New Zealand, our vehicles depreciate really quickly compared to the US. They depreciate so quickly because we have importing from Japan. They're right-hand drive too, so we import from Japan where they're much lower cost and they depreciate super quick. So if you want to buy a new car in New Zealand, it's really expensive and you lose so much so quickly. However, Tesla is different, so that's why I did buy it, because it's not going to depreciate like that. Whereas otherwise, I would just buy a used car usually.
And that's that's the other item too, is the depreciation. Teslas don't depreciate, or have been proving not to depreciate quite as rapidly as other vehicles. So that's another factor as well
or even appreciate in some scenarios as well. You know, especially those who bought them at the lower cost. Like you could buy a Model Y at 48,000 last year, right? And now I'm sure you could sell it used for more than that, probably.
That's exactly it. Switzerland, my buddy Mike pointed out that Switzerland's got an average leasing rate of 24% of their vehicles. Right. So that's just one anecdotal example. So just to wrap all that up, what I see is an opportunity for Tesla, if they so chose. One, they could potentially just reduce their prices. It's important to remember that the prices currently on Teslas are significantly elevated from the beginning of this year. People keep saying like, oh, you know, they've put these discounts on vehicles in the last, you know, as incentives to do the end of the year purchases, but those discounts are nowhere near bringing them back down to levels they were at the beginning of this year on their price increases. So we still have elevated prices. If you look at all of these tailwinds on potential margins, you know, factories increasing production and commodities dropping, Tesla could potentially drop their prices pretty significantly, which one, if they do that, that will just continue to influence CPI numbers dropping, as not just Tesla, but other companies have to drop their prices for their goods. But you're going to see the CPI dropping, and that'll be great. But as they drop their prices, they could potentially maintain margins. And then when you look at the drop prices on top of the IRA, and suddenly you're looking like if Tesla dropped the price of, you know, a $50,000 Model 3 by 10%, let's say. Now, I don't know if they would be that much because that would eat into their margins quite a bit. But let's just say they did. That's $5,000 off. And now you get a $7,500 rebate on top of that. You're looking at a car that a month ago you were getting for $50,000, and suddenly in January, effectively, you're getting it for $37,000. And if someone thinks that's not going to have an impact on demand, I think it's going to have a tremendous impact on demand. A bear or a person on the negative side might come out and say, oh, well, the interest rates are going to be so high on vehicles that people won't be able to afford them. I would argue that a $13,000 reduction or $12,000 reduction in potential price would more than offset the increase in payments they would be making on that higher interest rate. So it's kind of a wash, and maybe even better than a wash for the consumer. So people saying that it's just going to be, you know, it's going to wreak havoc on Tesla, I don't think is a great case, especially when you look at the clientele that are buying Teslas. I hate to say it, is not the demographic that is the worst impacted by the potential recession. So that's the other thing to look at as well. So I think, frankly, with all that combined, you're looking at a fairly insulated company to a 2023 recession, who may be able to maintain margins and also may be able to maintain and grow their demand. And in doing so, reducing their prices, they may absolutely, when you're looking at the repossession issues, may absolutely put the hammer down on these legacy OEM companies who are going to be totally burdened by these repossessions, can't afford to drop their electric vehicles any further in price because they're already losing money on them. And I saw you liked a comment the other day on someone's tweet. It said that Tesla's got 100% of the EV profit market share.
Yes.
They're the only company making profits on electric vehicles. And I don't see in a recession environment how any other legacy OEM could even potentially compete.
Yeah, that was Lee's tweet. So
was it? That's okay.
Yeah.
That's right. Yeah.
I mean, and that was like mind blowing because I've been thinking about it, and it like just one simple sentence. I was like, dang, that's legit.
I did that on purpose, Lee. That was my segue to you.
Okay, so the reason I was thinking of that was I was thinking like the financial industry. It's about 20% of GDP or something, right? But it ends up being, I think, maybe even 40% of the actual profits when it comes to actual profits, because it's so profitable. So that's kind of where I was coming back from. That's how I was thinking about that and how I reached that because it's, you know, all the legacy autos, we assume that they're probably not breaking even net even. They've got gross margins, but when it comes to include the OPEX and everything, it's unlikely they're even breaking even there. And we can see it in the financials for Rivian, Lucid, the actual EV companies that have to do proper financial statements, and they can't distort it with any of the legacy stuff. So we see none of them are making profits. Like absolutely none of them have a positive net profit. You can say BYD does have a positive net profit, but they also have this massive cell phone handset company involved in there, which is highly profitable with good margins, which has been subsidizing their EV development. So we don't know exactly how much profit margin they are really making on their BEVs, let alone net profits. So yeah, but we do know that Tesla is, and considerably. So that's a big deal. So when these other companies, they're going to start losing, if demand is bad, starts reducing, then demand reduces for everyone. It's not just Tesla, but Tesla do have these margins. They can reduce their margins, and then supply comes. Like you're saying, when you reduce 10% or so, doesn't mean you get 10% more sales. It means you get probably 20 or 30% more sales, perhaps. It depends on how elastic the demand is for the product. I'm guessing an EV will be a highly elastic demand because they have this intrinsic value of the cost saving of the relative cost of owning an ICE car, the fuel, the servicing, all the maintenance of an engine, etc. So that is like maybe $2,000 or so a year saving, which you could put a figure on and say that's worth maybe $20,000 or something, or $15,000, whatever you want to say, $10,000. So therefore, you can kind of cut that price off of an EV, make it lower relative to an ICE car, which means that it is therefore going to be more elastic when you start dropping the prices, because the difference between this cost saving and then the price, I know we've got like $68,000 Model Ys right now, which is pretty high, but when you're talking about $40,000 cars, there's this just little price, which is, so you got like this difference here compared to there at $60,000, $70,000, which makes it incredibly elastic demand, which means that when they can cut their prices, or when there is a $7,500 tax rebate or subsidy, or whatever you want to call it, then it is going to presumably have a big impact on demand. Of course, that is only for the US, that subsidy, but other places have subsidies too. Australia is getting $10,000 Australian subsidy on EVs, I think under 75,000 Australian dollars. That is huge. Plus, gas is more expensive in Australia than it is in the US. So that intrinsic value suddenly becomes higher as well, because there is that bigger cost saving. A lot of them have solar in Australia as well. Australia's going to be a good market. I think they can probably consume about 10% of what China can make as it is. They sell 1 million new cars a year, but I think, you know, you're competing against used cars here as well. Like everyone I know in Australia and New Zealand who bought a brand new Tesla, their previous car they bought was a used car, not a new car. Again, this depreciation thing comes into it as well. So, you know, there's China demand as well. I think they can basically, we know they can export about, well, we've seen in the past that they can export about 2/3 of what they can make there. So they just have remaining about 1/3 there, perhaps in the vicinity of 30,000 Teslas a month to try and sell into the largest auto market in the world, who are also trying to grow a lot in EVs as well. So if they have to drop prices a little bit there to get the demand, then, you know, it's not a massive market anyway that they need, because they can sell these vehicles elsewhere. So even if demand does drop in China, which it could, and things aren't great in China economically, we could but still, it's not. Also, these are, I think the Model Y now is at $43,000 in China for the. I mean, that's without the subsidy as well. That's how much Tesla are getting for them, but that's not excessive, right? Plus, again, like we're saying, all the cost savings associated with electric, when you reduce that, maybe it's more like a relative $35,000 car to an ICE car. So then you're competing against a $35,000 ICE car. So maybe a equivalent might be almost a Volkswagen. It's not high-end luxury we're talking about. Plus all the extra features associated with a Tesla. And if you add those extras on a Volkswagen, then the Volkswagen probably start costing even more. So
Hey, Lee,
the reason...
Just to add on to that, I think there's something that you touched on that's really important there. That price elasticity, I think, is even more amplified during a recessionary environment, when the consumer is even more discerning at looking for vehicles where that intrinsic value is higher, because they're going to want more bang for their buck. They're going to want more value. They're going to want something that's not going to cost as much to maintain, lower gas prices. They're going to become more concerned and spend more time researching than they might have done in a non-recessionary environment. So I think that just adds fuel to your to your argument's fire.
Yeah, I mean, essentially, it is a deflationary product when it is all finished and done. But right now, they you know, it's market skimming. We have only so much supply, so we can go for the higher end demand. But yeah, so China, okay, they might lose a bit of they might have to drop the prices a little bit, and that subsidy ends as well eventually, or supposedly. But when they drop the prices, it's relative to what else there is available. And if it doesn't take much to enter into these larger pockets of demand where the prices are lower and lower price points where there is more demand. But the other reason in China, like, is they've ramped up 30%. Now, if they are limited with their exports, and then they've ramped up this much from this much, then the China amount that they're selling has had to go up that much more, because maybe there's only a fixed amount they can export. So there is that maybe twice as much additional supply to be had in China, despite only a 30% ramp. Of course, they might sort out logistics and try and export more eventually, which would make sense, and I'm sure it's likely if necessary. So they also, this ramp, I mean, what happens when you increase production 30% in the same factory of the same square meters and floor space? You're going to probably decrease some costs as well. So they have decreased costs likely by increasing the ramp by 30%, which they then pass on to the consumer and increases demand accordingly to the new supply, yet profits remain stable, which I don't think everyone's factoring in. Then, you know, as the competition, right, what are they going to do? They can't cut their prices. They're already at maybe 0% profit already. So what are they going to do? Start losing billions and billions of dollars by selling more and more and ramping up further? No. So they're likely to cut supply. So if there's less supply, then consumers have less choice anyway. So they could potentially go to Tesla, as Tesla will be ramping up more supply and lowering the prices. So I think that, I mean, I'm not saying, like, you know, we could go into a bad recession and demand will drop more. Like you're saying, in the global financial crisis, demand dropped almost, well, maybe perhaps 40% at the peak. But you're comparing a boom to a really bad bust. So, I mean, in reality, it's not quite as large a discrepancy. So maybe 1/3 you might lose of actual aggregate demand for vehicles in the US or globally. So, but remember that is all of them, including internal combustion, whereas the EV segment, we do expect to keep growing. And the reason it's been holding back is due to supply, mainly due to not enough bit cells or batteries available. So we say, oh, the EV segment's been growing this much, as if it's like demand that's been growing, but really it's actually the supply. We don't really know how much the real aggregate demand is for it, because we are limited by supply so much. And even the legacy car dealers, they're not even charging market prices. They're adding on premiums because there's got so much demand for their EVs. So we're not even at a proper free market for that to discover where the real demand is, because we're so limited by supply still. And, you know, we look at the waiting lists we had for Teslas, they were getting insane. And I think the demand is having issue in the US, because, I mean, wouldn't any rational consumer just want to wait a month extra and save $7,500 US? That makes sense to me. But I think, you know, Tesla are obviously offering these incentives, and they are pushing for this Q4. This Q4 it has a lot of moving parts to it. It could be really big. It has a lot of potential. You know, pushing out $3,750 discount for a Tesla in the US. That's a huge discount. Plus in China,
that's a purchase discount too, which is
so. I actually. I ended up canceling mine because I don't own a house yet, so I didn't want to get mine. So looking at mine, my order was, I replaced it back in March, and it was $59,000 for the Model Y. Looking at the pricing now with a 3750, I actually would be able to get it for less than even if it was a rebate of $7,500 in January. So even if it was a rebate versus just a tax credit, it would have been worth it for me to take it now versus waiting a month. So that $3,750 was a prime price for them to come up with.
Wasn't it just for ones in inventory though, not pre-orders?
It was, so mine was actually due for me to get delivered in the beginning of November, and I pushed it off, and they would not let me push it off a second time, so it went up for cancellation. I was like, that's fine. They reached out to me in the beginning of December and said, hey, you still have your car on order. Instead of us, you know, canceling it and you losing your deposit, we're willing to give you $3,750 if you take your delivery now. So it wasn't just anything in inventory. It was, now it's everything. Literally, if you are willing to take your delivery or get a car out of inventory, you're going to get $3,750.
At your initial purchase price of $59,000.
Yep.
Right. Well, I mean, even if they just held the $59,000, then surely it would have been cheaper than buying anyway, right? With the $7,500 discount.
Yeah, because it was
Because
59,000, and right now the same vehicle priced out was 65. So
65. Okay,
yeah, so based off of that, if it was a rebate and I waited, it would have
sure.
been worth it to wait. But with that 3750, that ended up becoming almost $10,000 for me to take off.
Yeah. And the weight, you don't know what the weight's going to be yet. They're going to be obviously like the website probably crash, or people ordering suddenly on New Year's Eve. They all want to get their Teslas or whatever.
Right. Well,
And then the waiting
right
list will
now,
be 6 to 12 months.
but right now, inventory is building up significantly. Like I literally looked out to see what was there. When I looked out 2 weeks ago, there were only performance Model Ys in inventory, and there was maybe a dozen of them. Now there's a lot. There's long range,
Right.
there's performance, and literally,
Interesting.
I think I saw my vehicle that I canceled was in inventory still. So there are plenty out there for inventory. So if people are waiting, I still, if I wanted to get one now, I can go get it this weekend. It would not be a problem. So we'll see what happens. Obviously, when January hits, are these people now going to go rush out? But we also know that with January, people are going to have their holiday bills that they need to pay off. So I'm sure demand will be a little bit lower in January. But I'll really pay attention to the inventory levels and see how those come down. Because obviously earlier this year, there was literally nothing in inventory. So I'll pay attention to how that inventory comes down when we get into the first couple of months of next year.
Yeah, I think a lot of the demand issue is actually in the US, not so much China. Like that 22,000 discrepancy in deliveries and production we saw from last quarter, the majority, only like 5,000 of that was actually from China. So 17,000 elsewhere, most likely coming from Fremont. So all those were in inventory or on delivery. So that would then mean there was also on top of that, there was like another 8,000 that was in inventory prior to that at least. So there was a lot that could potentially be in that inventory or come out of that inventory for this quarter that wasn't even produced this quarter.
Well, and there's another margin tailwind there as well. As they smooth out the deliveries, they aren't doing this huge push at the end of the quarter for deliveries, which means they don't have to pay quite as much for the expediting fees, which is going to reduce the overall costs. So that's going to end up being a margin tailwind. Again, an opportunity for them to reduce prices in 2023. I should also mention, there's a lot of markets that still haven't gotten any of their Tesla shipments yet. Like they're just opening up, I think Vietnam or Thailand, I think it was.
Yes, Thailand, yeah.
Thailand just opened up, yeah.
Yeah, already so 5,000 orders.
There's so many countries that are still waiting for their first Tesla. And they can start servicing those countries with some of these China built vehicles. And as Lee said, I think there's a lot of markets that I think can soak up that demand, and it's probably.
Now I'll agree to that, but then don't forget, to be realistic here, 5,000 orders coming out of Thailand, that's a day and a half of production out of Shanghai.
Yeah, absolutely. I think, on balance, if you're looking at inventory, if they've got leftover inventory, that's where they could soak up some of that inventory. But the cost of shipping 5,000 vehicles to one country, they better be on the way to another country because they're not going to load up a boat with just 5,000 vehicles.
Oh yeah.
These are the low cost Teslas as well. Bear in mind. I mean, like I said, it's like 43,000 US just to sell it in Shanghai. So if they've got to be making some profit on that. So you got to wonder like how little is it costing to actually build them. So
yeah, and actually,
that's
what I was going to ask you, Lee. And last we knew, and I think it was around $36,000 for average cost to build. So what do you think the average cost is going to be to build now?
I mean, I would say that I would have thought that the Model Y rear-wheel drive in Shanghai shouldn't be too far off 30,000.
Okay. And what do you think Project Highland is going to do for cost to build?
Yeah, so Highland, I think, is actually really exciting. I think it's a really big deal. There's this talk of a $30,000 car coming, which is what we need to get demand in order to get the numbers we want. But for starters, I mean, that's going to be assume a compact or something like that, a smaller car. So for starters, they'll need a factory for that. There's no sign of any factory coming along for that for a start. So we're not looking for probably 2 years away. If they started today, maybe. Then again, they also need the cells for that. And if you have a $30,000 Tesla, like we said, how elastic the demand is, and you start cutting cost of all the ownership of an ICE, and then only have $30,000 to pay, I mean, if you finance that at 5% a year, that's $1,500 a year just on interest. So if you're saving $2,000 a year on fuel, it adds up to being like almost, it's a very cost-effective, low cost of ownership vehicle relative to any ICE car. And $30,000 is going to be obviously coveted by globally, 5-10 million people a year would want that Tesla. So they aren't going to have the facilities to cater to that much demand. So you'd have high waiting lists, or the price would just go up again, and it wouldn't be a $30,000 Tesla. But the Model 3 Highland, like we're saying, Model 3 is obviously going to be a lower cost car than the Model Y. It's a smaller car. There's less of it. It will be faster to produce because it's smaller again. Then Model Y isn't even using front and rear castings, at least, not without the 4680 structural battery pack. So that's the current version isn't in Shanghai. So if you add that in there and you add structural battery pack and all that, then, you're going to get costs pretty low, which means that even at probably a $35,000 price point, you can still hit that 30% margin, which is just, 30, you need that demand, and there's a $35,000 Tesla, then that should cover it, and you still get those margins, possibly even more.
And then when you add the IRA or some of these rebates on top of that, you're there.
Yeah, exactly. I mean, because I think they're going to shut down Fremont, and I think they're going to shut down Model 3 Shanghai factories and just make these Model 3 Highlands. I don't know if they'll do it at the same time. It probably doesn't make sense to probably do it one at a time, I'd say. And
yeah, from what I've heard, I think Fremont I think is going to go first. I thought it was going to be Shanghai first, but it sounds like Shanghai is going to be Q3 of next year, and Fremont may go first, and that might be why we saw the Model 3 line come down for the rear-wheel drive, or for the long range, just for that reason.
That might make sense, and they probably want to get a mass market Model 3 in there, in for the IRA as well, because I'm expecting. I mean, it's possible they might even end the Model Y there and just have a huge facility producing maybe 1 million Model 3s there. What I'm calling most likely a mid-range vehicle. I think they can use these CATL batteries that they have at this new factory that should be up and running early next year, at least first phase. And they could have the M3P cells there. Either way, they'll have the Chilean battery, which is going to be structural. And Elon said, only going forwards, it only makes sense to use structural batteries from now, structural battery packs. So they're not going to, they're not looking in the rearview mirror and going to go back to their old ways. They're going to use the Highland will obviously be structural battery pack, front and rear castings, saving a massive amount of cost. But think also the production speed you could have. Fremont is a huge facility. If you remove the Model Y line and you just have Model 3, you could easily make 1 million Model 3s out of there for this mid-range Highland car at a $35,000 price point, maybe a cost of $25,000 or something, or at least 30% margin anyway. But I mean, like I say, the IRA, so you're probably more like $45,000, and you're still going to sell 1 million of them a year potentially, and have a massive margin, which is why they're like, oh, hang on. This makes a lot of sense. We'll have to, fine, we'll lose the Model 3 line maybe for a whole quarter or something like that. But look at the profit difference that comes out, and the number they can suddenly make maybe twice as many or 3 times as many Model 3s. Who knows? And then obviously Texas has the Model Y factory going. So then the 2170 batteries, they're spoken for now. They're going to be in the semi truck. So they can't make this long range Model Y from Fremont anymore because they need all these cells for the semi truck, and they're made in Nevada, and the semi truck's made in Nevada, so that makes sense. Then it's possible that these also on top of that there will be a performance version of this Model 3 Highland, and the 4680 cells that are made down the road in Cato Road, they could be used for a structural battery pack in that as well, and have the Model 3 Highland performance version and maybe long range as well. But this mid-range one, I mean, you're probably going to be with the energy density you get from the M3P cells, which you guys know what those are?
No.
I'll tell everyone anyway. So it's like a hybrid. It's LF where LFP meets ternary. Ternary being having 3 elements like NCA or something like that, right? Except these cells, they don't use nickel and they don't use cobalt either. So it's manganese, it's nickel, and it's magnesium, I think it is the other one. Zinc. Oh no, I think it's zinc actually. Sorry. And they combined that with an LFP cell. So it's at the cathode. So you have the advantages of best of both worlds. So you're getting low cost, about same cost per kilowatt hour as an LFP cell, but you also are getting like maybe a bit more energy density out of it as well. So it's that little bit difference makes a huge difference when it comes to the full battery and the range you can get for the same weight. So this is exciting, and that's what we hope this new CATL factory should actually be making. So we have this structural battery pack with this more energy dense cell over LFP at the same cost, front and rear castings. So I'm hoping we could get maybe 300 miles range from a Model 3 Highland with that battery pack, which obviously would be worth even more again than the current rear-wheel drive version, because you're getting that much more mileage. So it would cost a lot less to build, and it's going to be a better car. It'll drive better too, because it has a structural battery pack, and it's going to be lighter on top of that, which means it drives better, and it'll have more range and likely more performance to go with it. So it's better in every way and costs less, and then $7,500 potentially off it with the tax credit too. So, you know, like I'm saying, I don't see why they couldn't make 1 million of those in the US alone and sell them all.
And
then, oh, go ahead, Dave.
I was going to say real quick that those marginal, incremental on the margins things that drive margins up and increase demand, you start counting all those up and start adding all those up, it becomes pretty impressive. And some of them are right on. They're not like these on-off switches. They're not like, oh, now we're suddenly putting this new battery in this battery pack. There's things that continue to slowly increase demand. Like, I think about the charging network as a great example. Tesla's going to continue to increase the charging network precipitously over the course of this year as people continue to see more of those chargers out there. As there's more availability in the chargers, you're going to see a reduction in the fear of electric vehicles and the range anxiety continue to fade away, which is going to continue to increase demand. You start adding all those little things on top of the manufacturing efficiencies, the battery chemistry efficiencies. It's just it's a pretty amazing little flywheel of demand and margin all working together.
Yeah, the incremental added value you get to the product becomes more and more value. Plus, you get the over-the-air update. Suddenly, it has more features, etc. And then they're reducing the cost, removing parts. And then there are some leaps in manufacturing, like structural packs, front and rear castings. On top of that, removing various other elements to it. Ultrasonic sensors now you're hearing, you know. So that little bit, it makes a difference each time. And then there's lots and lots of them. And then the cost comes down and the value comes up and the demand just keeps on going up and up as a result. And as they are exponentially increasing supply the whole time, then they do need to decrease the price to meet where supply meets demand. But if they're passing the cost on to the consumer to do that, then the profit they make, not the profit margin, the actual profit will stay the same, and the profit margin will increase.
So I think a lot. I'm sorry. Go ahead, Tim.
So then my thought with this whole project Highland, when I thought about it, was if they're going to come out with, let's say it is 2024 that they release this sub $30,000 vehicle, that in my eyes would basically completely cannibalize the Model 3. Because the Model 3 is so close in price to the Model Y, people would choose that. And then if they had the lower priced vehicle, nobody would want the Model 3 because why would they? So then my thought is with Project Highland, they are now going to bring this down to a price point that people will choose the Model 3 over the Model Y. But with that lower priced vehicle, that incremental jump in price, the significant value that you would get from the Model 3 versus that compact car would be worth it. So this way that Model 3 is no longer going to be cannibalized.
Yeah, it's interesting. I'm actually just looking at the comments and I'm seeing, some of the, agreements and disagreements, but I'm imagining listening to us talking about this and thinking to myself, well, this is all great. Like, this is amazing. But while Tesla is executing so well and continue to increase margins and finding ways to increase demand, my stock is just losing value precipitously every day while this amazing stuff is going on. And I think there's so I've been a Tesla investor since 2013, and I'll just say this is kind of how it goes. You'll get these long periods of just like, why isn't the market recognizing the value of this company? And it's always different reasons. The noise about like Elon's really wrecking the value of this company, that has been said before. Like in 2017, 2018, it was the same thing. Meanwhile, the company was executing, increasing margins, and then doing all the same stuff. And here we are again. Lee's making all these great points about where the company is doing all these great manufacturing efficiencies and batteries, and we're talking about how demand is going to be there. And yet there's all this fear about macro and then all the noise regarding Twitter. And to those folks that are frustrated about that right now, I would say, one, be patient. Number two, it's always darkest before the dawn. Number three, these times do not last forever. And my suspicion is that when it comes back, it will come back with a vengeance. Because there will be a data point that will suddenly say, that will remind people, oh, yeah, we're invested in this company that's kicking ass. So I think it's important to keep that in mind. And that will be demonstrated most evidently in those production delivery reports and those earnings reports. If the price of Tesla stock stays where it is today, $150 a share on a down 16% week, which is a tough week. But if it stays here and we go into January's earnings report, and suddenly we're looking at a significant increase in our cash on hand, our free cash flows, the profitability of the company, our price to earnings ratio goes down to a point that is, there won't be an institutional investor in the world that's going to look at that and say, oh, this isn't a phenomenal deal. So hold on. I mean, that's all you can do. I think I was watching one of Lee's videos just recently where he was talking about this. The more earnings reports that we have where the price is this low, the cheaper the company is inherently, because it's going to be demonstrated through, greater value, intrinsic value of the company and our PE ratios. So if you can, stay patient. That's for sure.
Yeah, I mean, I think what's hurting the stock price the most is the actual physical act of Elon selling so many shares. There's just, it's a lot of supply to release on the market, and there just isn't the demand, especially in these times. So, I mean, I think that's the main thing that why it is so hard to believe, because there just isn't the supply and demand to meet the level of sales that Elon is obviously doing right now. So, and we just hope it stops soon. It'd be good if he tweeted saying, "I've stopped selling," and we heard that again. I'm sure it'll be very happy. But yeah, so I try and look at, because we're talking about a growth company here, right? And aiming for 50% growth year over year, just in actual quantity of production, not even revenue or necessarily profit. Profit should be much higher than that. So you can't really take a trailing 12-month PE ratio because it's moving so fast and so much has happened already. Everyone's like, a lot has happened from the start of this year to this quarter now. There's a lot more production. We're going to hit the 50% production pretty much, close enough, all right? I call that a win, especially given everything we've had during the year. But on top of that trailing 12 months, we also have this Q2. And you remember how bad Q2 was with the lockdowns and the cash furnaces burning all the money. It was tough. And then we had this Q3 as well, which had the more downtime in Shanghai with 2 line upgrades from the 2 factories there. And on top of that, we had 22,000 missed deliveries from production. So again, that wasn't an accurate portrayal of the real-time success of the company. And now, hopefully, this Q4 will give us a more relative term to the financials of actually how well Tesla really is doing, and will give us investors a lot more perspective on like, oh, wow, okay, geez, this is actually really low. And the PE ratio relative to this quarter is more like 25, not under 50. This is a big difference. I better buy some Tesla. So, I mean, that a PE ratio of 20, well, probably even under 25 now, we dropped even more. So, I'm thinking like $4.5-ish billion in earnings in Q4, excluding any potential deferred revenue from FSD. So, you multiply that, that's $18 billion a year, And if you've got a stock price under 500 billion, it doesn't look overly expensive anymore. And then that's of course the average of the quarter, basically. I mean, we're at a higher run rate at the end of the quarter than we are at the start of the run rate. So if you get an actual real time, you're probably more like $20 billion a year. So even lower PE ratio. And it looks like we have a lot of hope for Q1 as well. The Chinese engineers have come over, if you've seen, and they've done an outstanding job. China is insane at manufacturing. They have so many specialists there in areas that you just can't find in the US, and an abundance of them. And now I'm really happy to see that they are bringing them over and they will sort out these lines. Maybe 4680 production, they can help there, and obviously Texas, and probably something like Fremont. They're trying to work out how they're going to do the Highland manufacturing there. So I think that's exciting. So there's a lot. It's not going to take much more now for this PE ratio to just become almost value investing for like someone like Warren Buffett. At this stage, it's getting crazy, and so much more growth. I mean, these other factories, these new factories, they've barely even begun. There is so much more potential there. Then Fremont going to be ramping up a lot as well. But the thing is, when they even increasing sales by 50%, the actual quantity, you're going to increase their profits by closer to 100%. So when you have a P ratio of 25 and then you double the profits over the next year, the P ratio, if the stock price doesn't move, turns to like 12 or 13, which does really start to get crazy. But are we that crazy to think that it is low? I don't know. I thought 25 was just insane, and here we are. So who knows?
And one of the most frustrating things is, when the quarterly earnings report comes out and they look at the full year and they say, oh, Tesla only increased their deliveries by 46% instead of 50. They're never going to qualify that by saying, oh, but their number one highest producing factory was shut down for 2 months. That's never going to be part of the equation. But a discerning investor, and institutions are going to see that and recognize the continued growth trajectory of the company. And I can't imagine, to some degree, they wouldn't look at the actual PE and then have some underlying assumption about what the PE would be had that factory been open for those 2 months. I mean, that's got to be taken into account by at least some of those institutions. And the people that are really worried about 2023, at least the Q1 and Q2 year-over-year comparisons should be pretty good, because unless we get another lockdown in Shanghai, we had 2 months of non-production out of that factory, darn near. So that should be good year-over-year comparison.
Then I look at like Q3 and think about when we got the numbers coming out for deliveries, where we had a record miss. Like, how do you have a record miss? Like, just because the analysts said that they were looking at it, and I get that they're putting the stock price, and they're like, all right, well, if they hit our expectations, the stock price should be X, Y, and Z. I get that, but like, Tesla is still growing. So now we're looking at another quarter where we're going to be coming in at potentially 430,000 deliveries, almost a 90,000 delivery increase over last quarter, not last year, over last quarter. And we're coming up. And if we miss, the stock price might come down because we only went up by 80,000 quarter over quarter. It doesn't make sense in my brain.
I think they take advantage of the fact that we look at the company in a vacuum and not in comparison to other automotive companies. When you look at the growth rate of Tesla in relation to other auto companies, we're blowing them out of the water. You see the charts all the time of every company is negatively growing and Tesla's positively growing. And the same will be true next year. If you look at the static growth, or really negative growth, of legacy auto, and you add a recession on top of that, how much faster is their dropping rate of annual deliveries going to go? Even if Tesla didn't sell a single, now don't misquote me here, I'm not saying this is going to happen, but if Tesla didn't sell a single additional vehicle over what they sold this year, they go in and sell again 1.4 million vehicles next year, same thing. They're going to blow every other automaker out of the water in relation to comparative growth if they're just static, because the other auto companies are going to end up being significantly negative purely because the EV market share is growing and the EV adoption rate is growing. So, I mean, that should be looked at. Tesla should be seen as the greatest safe haven within the automotive investment world right now, especially going into 2023.
Yeah, and then going back to Lee's point before about the fact that, Tesla is 100% of the profitability of BEVs in the world. At the end of the day, you don't pay your bills with vehicles sold. You pay them with profits.
That's it.
And you can't survive if you don't have profitable vehicles out there. And we've
Tesla
seen,
can't make it, no one else can, basically.
That's it.
Yeah. And so
they'll be the last man standing.
Yeah.
Yeah, and when we're looking back and we were talking about, the recession that we saw, and we saw vehicle sales total global come down, we've already seen that. Don't forget, in COVID, we went from 92 million vehicles sold globally down to 73 million vehicles over the last couple of years. So we've already seen a massive drop of 20% in global auto sales. So going into a recessionary year, do you guys think that we're going to see even more of a drop in global auto sales?
I think it wasn't so much a drop, but it was more it was just pushed up during that period of time with all the backlog and money being so cheap. I think that there is that contrast as well to bear in mind.
Okay, that's valid. Okay.
Yeah,
I didn't even think about that. I completely forget that for basically 10 years after the housing crisis, we had almost zero interest rates forever. So
that's right. Yeah, there's going to be a rubber band effect with those interest rates coming into play, but that's all going to be. It's going to take a while to see how that plays out.
This is actually a question here that I was going to ask you guys too. So saw the live stream. Thanks, Sith Lord. How many Cybertrucks at full ramp out of Texas?
Man, that's an awesome question.
Do you guys have them on order? Actually, I don't. Lee, can you even order one over there?
Yeah, I ordered 5, but I don't know if I'll ever get them. I don't know if they'll ever come.
I'm in the first 20,000. I've got one in the first 20,000.
Nice. Wow.
I definitely got in late, so I'm not going to get mine until probably 2026, but that's okay.
How many can they ramp? So I mean, Elon said they can hit volume production, so that's a minimum of 250,000, but you'd hope they go higher than that. There's 1.5 million backlog, supposedly, if they all ordered. So
wait, Lee, I've got a question there about an assumption you just made. Why is 250,000 volume production? Why is that definition volume production for the Cybertruck?
5,000 a week is volume production definition, yeah.
Okay, yeah. So
Elon's definition of volume production, at least, yeah.
I would be curious if they, if because if there's a 2 million vehicle backlog, and they start producing them next year. I mean, that's a great question because I'm thinking to myself all the time, how angry do you want to make customers if you're like, oh, we're only going to be making, 250,000 a year in 2024 if we're lucky, which means people aren't going to be getting theirs until 2027, 2028. It's the largest backlog, I think, the largest order log they've had for any vehicle they've made. I've got to imagine that they're thinking that the volume production, getting the volume production has got to be like double what it was for some of their other vehicles. But maybe that's just, crazy talk.
I think the Model Y could in Texas should be eventually 1 million. If they can do 800,000 in Shanghai with the older processors, then sure, 1 million in Texas seems possible. The Cybertruck, okay, it's a much bigger car, but it's designed around manufacturing. It's very simplistic design in a lot of ways. So, and there's no paint shop either on top of that, which is a huge part of the floor and takes a lot of time. So it could be arguable that even it could be more than 1 million Cybertrucks a year in there, but I would say at least 500,000 and probably more over time.
And how many lines do you think they're going to have? Because we know at least of 2 of the 9,000-ton gigapresses coming out of Idra.
Yeah, well, I assume 1 for the front and 1 for the rear products.
And we saw the prototype casting that Sandy Monroe was going over. It looks like it was just a prototype casting. So I don't know how close that's going to be to actual true casting.
Also, it might have a different structural battery pack compared to the Model Y. I assume a larger one. But I think that they're going to start with, and people don't like it when I say this, but I think they'll start with the dual motor, not the quad motor first.
Okay.
And people are like, oh, I need 500 miles of range, especially for towing and stuff. But I assume that they would want to. The cells are scarce, so they would make the smaller versions first this time, rather than the premium, more expensive ones, just so they can make more. And it's simpler as well, of course. A dual motor, about 300 miles of range at a guess. But hopefully, everything that should be happening, we are seeing happening on the floor. They're preparing for it. They're doing these test molds. They have the gigaton press, but they're there. We're witnessing it. We're witnessing them do the flat factory floor. We're witnessing them make the cells with the production line, with the battery lines. They are there. Everything that should be happening is happening. They're not trying to hide it in some secret lab. We're allowed to fly drones through and see through the windows. They're not being overly secretive or coy about it necessarily. So as hard it is to believe such an incredible vehicle, everything that should be happening is happening.
The only thing we haven't seen is the is anything indicating that they've got manufacturing equipment on the floor for the exoskeleton build out. I think we've seen the giga presses, we've seen the lines in place, but we haven't seen how they're going to the manufacturing process for the exoskeleton, the bending of the cold rolled steel. So for me, that's like a huge curiosity, just a scientific curiosity of how they're going to build that out. And
Yeah.
I don't know.
It's going to be like origami, right?
Yeah. Now my speculation, and this is just throwing it out there as a what if one of the reasons that Tom Zhu is over there in Austin right now is to take a look at the Cybertruck line. We're making a broad guess that he may be put in charge of maybe global production for all of Tesla. What are the chances that we see a Cybertruck line coming in Shanghai?
I think they've taken orders in China for the Cybertruck. So my assumption is that they intend to deliver them there. I think there's going to be more. I think a lot of people have this assumption that Cybertruck is an solely American product. I think there's a lot of countries that they will be able to ship it to that have a huge desire for that type of vehicle. And like Australia has already got, pickup trucks, and I think there's a lot of markets for that. Now, is it going to be, in London? Probably not. Is it going to be in Paris? Probably not. I don't know how you would drive that car down some of those streets, but I think there's a lot more markets that the Cybertruck will be sold in than people are anticipating.
Even just previous pickup truck buyers, I think it's attracting a whole new segment of buyers as well, who previously would never consider a pickup truck, but a Cybertruck, that's something else. So, we say like F-150s are almost 1 million a year just in the US they sell. Well, that's as a pickup truck, but this is a Cybertruck, which offers so much more in so many ways that the demand could be even higher than that. Just in the US, who knows? It could be twice what an F-150 is in the US alone. There was the talk of the European version would be smaller and to fit on the roads better. It would be tough parking it anywhere pretty much as well. In Australia, yeah, there's a lot of pickup trucks in New Zealand as well. They call them utes instead, but yeah. Again, you'd probably need smaller versions. It's probably for China as well. But yeah, I mean, that vehicle is going to have global demand. It's just so cool, right?
Oh, yeah.
It's just too amazing.
Now, thinking about production, so how many do you think that we're going to have produced in 2023?
Oh, man. So I'm so hesitant to give an answer on either side, because if you say, oh, even how much they'll produce like annually at full ramp, if you say, oh, it's going to be this much, you're going to get people's hopes up. If you say, oh, it's not going to be this much, then people are going to be disappointed and start canceling their orders. So the perfect amount.
Every Cybertruck that's produced, we know is going to be delivered. That's not a question. That's 100%. Obviously what's going to happen. And like I thought about it, like when I was on with Brian from My Tesla Weekend, we were discussing the Semi and how many we thought were going to get produced. And I went on what I thought was an aggressive level for the Semi for 2023 of 10,000. And then Elon comes out and says 50,000 for 2024, completely blowing my mind. Obviously, Elon likes to shoot for the stars, but if that's the number he's thinking about for the Semi, I mean, what are his number productions for the Cybertruck for 2024?
I hate to say it, but I think 2023 will be the year, kind of like they're doing with the semi-truck right now, where they're giving it to just a smaller number of customers and kind of a test pool. I'd be willing to bet that 2023, if there's more than 50,000 delivered in 2023, I would be pretty damn surprised, because they got to ramp the lines. To Lee's point, it takes them a while to get to volume production. We've seen that with every vehicle they've produced. So it's going to be a while before they're really at that point.
They're doing well if they get 100,000 or so Cybertrucks next year, I'd say. That'd be great.
I was figuring 50,000 was my guess. If they start production in Q2 and deliveries start in like July, right, the beginning of Q3.
Yeah.
It's probably it's probably 50,000 if things go well, really. Yeah. And from next year, I mean, from 2024, then they could be 300 to 500,000, depending on how well things go. So yeah, it would take a while to fill in that backlog for sure. But as for 2023 total production, I think, in that Ron Barron interview recently with Elon, Ron asked if they were at about 40,000. He set a statement. He said, "You're at 40,000 a week by the end of the year," and Elon agreed to that. So 40,000 units. That's 2.1 million basically at the cross section of the annual run rate at the end of this year. They're saying, right? So if you're at 1.4 million production for this year, and you want to grow it by 50%, then that takes you to 2.1 million. They are already at the run rate of 50% growth already at the end of this year for next year. In other words, if they didn't grow any more or ramp up any more production and consistently had the same production throughout all of next year, they still hit 50% growth. So I think, as long, the only issue I see, the main issue I see is that they are using 2170s in Texas and Berlin still. And there is only a finite of 2170 stockpile, which they are depleting probably at a more rapid rate the more they ramp up. We just heard that Texas hit 3,000 a week, which was a good sign. But eventually they're going to run out of 2070s and they have to replace them with something, they hoping BYD, Blade batteries, perhaps in Berlin. But obviously we want the 4680s in Texas to replace those. So that's what it would come down to if they can maintain that growth. But it should hopefully it should go well, obviously. But it won't take much really to beat 50% growth next year. I'm hoping, or even it's not. If 4680s go okay, then 2.3 million next year shouldn't even be that hard to get as total, which will make a massive difference in the financials, especially when you look at this PE ratio with the trailing 12 months. We're at something like just over $11 billion in earnings. That's what the trailing 12 months is. And if you hit 2.3 million in units next year, then you're closer to, it should be in excess of $30 billion. In other words, about 3 times as much earnings as the current trailing 12 months, which the current PE ratio is based on. If the current PE ratio is about 45, and you take 1/3 of that, then you're down to 15. A PE ratio of 15 by the end of this year. Actually, so it'd be January when you get the financial reports in 2024. You would have a PE ratio of 15 from the trailing 12 months if we hit that. But there might be downtime in the Model 3 factories for the Highland and things like this. So there's all these other things there's no such thing as a perfect quarter. There's always something going on somewhere. So 2.3 million should be good.
There was someone that was tracking the immaculate quarter and showing how close we were getting each quarter to getting the immaculate quarter, and we haven't had one yet, or maybe there was one so many years ago. I think that's pretty funny because
Q1 wasn't too bad this year.
Yeah,
wasn't far off.
So bad.
And we had that 33% margin as well, which was amazing. But I thought Q2 was going to be this insane quarter because that was when all these price rises that we've seen would finally catch up. And this 33% margin would go up to like 35% margin, but then we had the lockdowns, of course. And then I thought, okay, well, that's going to be carried over to Q3. And then we had these line upgrades, and then we had these the missed deliveries. So okay, so now this quarter is going to be Q4. But now there's the demand issue for the US because people are waiting for the rebates. So, okay, so it's going to be Q1, but then they're going to run out of 2170 sales perhaps, and then it won't be so good. So it'll be the Q2 when they've got 4680s ramped up more. It's like, but at the same time, it is also growing in other areas. Things are happening. I mean, we've been looking at 4680 sales in Texas and Berlin trying to ramp up, and then under our noses, there's Shanghai going up 30%. There's always something somewhere. The Tesla aren't just working on one thing. They're working on things everywhere. And energy is just going to come up. And we'll not even notice that. Suddenly energy is going to be like, whoa, where did that come from? Suddenly doing like 10 gigawatt hours a quarter sometime next year. That'd be amazing.
So now my question to you guys too, thinking about if Elon is anticipating that we're going into a deep recession next year because of what the Fed is doing, and Tesla, with their pricing power, is going to come down on the prices of their vehicles. We already saw what happened in Shanghai when they came down on the prices, and we saw that the demand cliff fall because people were waiting for those prices. I had anticipated this, so it's going to be an initial drop in demand with a massive increase afterwards. What do you think that's going to do if, let's say, we hit Q3 and they start coming down incrementally on prices? Do you think that we're going to see that same dip globally wherever they come down on the prices?
I mean, there's a direct correlation between dropping of prices and demand increasing. So you can't drop demand without increasing the underlying base, or you can't reduce prices without increasing the underlying base demand. That's, I mean, kind of it for a product. Well, I'm sorry, what's that, Lee?
the supply and demand, basically.
Yeah, that's the
You
best.
lower the price, the demand increases, but the supply reduces.
Right.
100%.
Well, and I see that, but like I said, like we saw in Shanghai, it was quick. So it was, it dropped down and then the demand came right back up. Do you think Tesla would come down on the prices incrementally like they did going up? Or do you think they're going to come down and say, all right, $5,000 coming down on the Model Y is the right thing to do. We're going to come down on that and then sit on it for a while. And obviously there's a lot of different factors that go into it as to timing, but I'm just curious if we're going to see a sharp demand cliff immediately and then a massive run afterwards.
I anticipate costs coming down for Tesla, even in the macro issues. In this scenario, then commodity prices will come down, etc., and eventually Tesla's costs overall will come down. But on top of that, the way they're ramping, Texas, Berlin, these factories will make these vehicles at lower cost, and the 4680s will cost less. So there will essentially be lower cost, which means at the current prices, there'll be higher margin, much higher margin. I mean, I think it's not. You can have 50% margin on Model Y perhaps from Texas. That gets crazy, and that's without the IRA even. So you have a lot of buffer basically there to still even get 40% margins, let alone 30%, which is still going to be good for us in that sort of time, especially relative to the competition, whatever's going on with them. But I mean, if it is as bad as like Cathie Wood and Elon's agreeing as making out, then I think you might even end up having a bailout for legacy autos again. Who knows? I don't think the government's going to let them go under. It's just so many jobs to keep so many people employed in the nations. And I think this is also part of the reason why we have the IRA is to keep out the Chinese EVs, because they want to keep all the jobs in the automotive industry as well in Europe and in America. That's why they are incentivizing even the battery manufacturing too there and the cell production with those subsidies. Remember we also get $45 per kilowatt hour subsidy for a 4680 cell. I mean, it's just going to be so profitable in so many ways as soon as they're ramped up. It's looking good in America. And America, this global recession, hopefully America supposedly isn't going to be as bad. It shouldn't be as bad as the rest of the world, which is Tesla's main market, and it's where they are doubling down the most on, potentially with this new factory as well. Now we're hearing rumors that it might even be in Mexico, but that might just be a cell factory or something. We're not sure. But either way, we expect this new location that Elon has promised us. It should no doubt be in North America. And Elon also saying 1,000 gigawatt hours eventually to be manufactured in America. And you guys have done some probably back of the envelope numbers off that. And the revenue and profit just gets insane when you start talking about those sorts of amount of cell production.
Yeah, and I think there's, Tim, to your question, I think there's an important thing to look at in regards to Tesla's mission. So if Tesla's mission was to make as much money as possible, and the old Conan saying of to crush his enemies and hear the lamentations of their women or whatever, like that was their goal, then this would be the year they could do that. They could literally drop margins down to like 1% and drop the prices of their vehicles precipitously and sell every vehicle they were making. They already are, but I mean, if they could increase production just exponentially, they could probably sell vehicles exponentially, and that would kill the demand for every other legacy automaker, on top of a recession, on top of the repossessions and the other debt load they're carrying. That's not really,
yeah.
That's not really
demand
their,
for the legacy.
that would be,
it's tough.
Yeah. So
Tesla is limited by supply as well, and people do need, like you're saying, 10 million cars or 12 million cars, even in the bad times. And Tesla aren't close to that many just in the US alone. So it's tough for them.
That's right. So I don't think that you'll see a sudden drop in prices. At least not too great a drop in prices, because to Lee's point, the IRA is there to keep jobs in place and keep the automotive industry in place. And I don't think Tesla's intent is to conquer the world at the cost of these other companies and killing the jobs there and all this other. That's never been Elon's goal. I think you'll see, and that's also not the best way for them. The only way they'd be able to do that is to keep the prices high above where commodity prices are dropping, and then suddenly come down to meet them. Which I don't think they would probably do, maybe a little bit, but not very far. I think the way to squeeze the best dollar out long term without killing your competitors in an unnecessary fashion would be just as the prices go down, incrementally drop prices where appropriate and where demand demonstrates it's needed. So yeah.
No, and that's a good point. And Elon has said it before, like you said, Tesla's mission and goal is not to sell every single car on the planet. At most maybe 20%. So Elon has even said that competition is good right now. We need as many people producing EVs as possible because Tesla can't possibly do it on their own. So yeah, you're right. It makes absolutely no sense for them to just completely push out the competition, which they absolutely could if they wanted to. But it makes no sense for them to do that at all. And to Lee's point, they don't have the supplies.
They don't have the supply. Yeah, they don't have the supply. I mean, I think they'll hit a market clearing price where supply meets demand more or less, and have maybe perhaps a 2-month backlog or so, which is tolerable for consumers, but also keeps a little bit, if it is coveted that much, you want a little bit of scarcity there as well. If a new Apple phone comes out, then the first ones are sold immediately, and you might have to wait a bit. It's branding as well, partly. You don't want it to be too easy for anyone to just get. You want a bit of prestige in the brand, So yeah, I think but of course, then you've got the robotaxi scenario as well, which then replaces 5 cars, and then that probably would hurt a lot of auto companies if that was suddenly ubiquitous, at least, which is a while away. But there is that factor to think about. Of course, the fact that Elon is allowing licensing for FSD, or saying he's open up to that for anyone, means equally perhaps that these cars could also join into the robotaxi network too, and Tesla just takes a cut on the rides. So who knows?
Yeah, I should point out that while Tesla's not here to destroy all other companies, they're also not in the business of trying to keep terribly inefficient companies afloat. Right. I don't think there's any love lost from Elon when waste is seen, to go the way of the dodo. And I do suspect that there will be a great consolidation, much like happened in the cell phone industry, on the number of automakers that are out there. You might see the total number of automakers go from 30 to 10 to 5 globally over the course of the next 10 years. And if, to Lee's point, if they do 2 things at the same time, one, if they can produce this sub $30,000 vehicle, and then they can produce it, in half the time it takes to produce the other vehicles, at half the cost, and they're producing twice as many, and they're pushing them out the door, and they've got robotaxi competency and capability inherently to that. Tesla may just end up this is hyperbolish, but may end up replacing the entire automotive industry. It may just become Tesla sells the robotaxis, and that's what cars are now. It could end up becoming that situation. All
those other, the ICE companies now, the legacy, they have so many different models. There's this incredible amount. I mean, like BMW, for example, to include all the different trim versions, you probably like 30, 40 different versions, right? Even a 3 Series has various different, station wagon or sedan or whatever. So there's far too many out there, and I think that Tesla just has basically 2, right? 2, and I think that's what they need to do. Legacy need to limit the amount of cars they have, and hit economies of scale with those models, rather than trying to offer a different alternative of a different version of so many different varieties to try and hit different markets and compete with their competitors. They've got to get the costs down and focus on just some single ones and refine them, get the production better, economies of scale, and just keep on working and improving that car. Kind of like the Porsche 911 scenario, basically. Just improving it and improving it over time, and it evolves and hopefully obviously makes a profit. But they can't be doing that with 20, 30 different models at a time, especially electric. They need to hit volume production on one for a start, and then start getting the costs down for that. I think that's the way to be. And maybe Ford will only have a handful of different cars in the future. Maybe it'll just be the Mach-E and the F-150 Lightning and the Transit van, and maybe a couple of others, and that's it. That's all they get. And then the same for other brands, other auto legacy companies. Some will just completely go under. I think there is this fixed cost of having a battery in the car, which costs the same whether you're Mercedes or if you're Toyota. You still need the cells. That's a cost. If you can't sell a car to cover that cost and everything else and still make a profit, then what chance do you have? How can you survive? If your brand is not high enough value for people to justify that cost, then what? Whereas another brand is. So Porsche, obviously, a good example. They're going to have the same cost of a battery as Toyota. Obviously, they probably would use a higher energy dense one, but still, it's a negligible difference when you've got a car that people are willing to pay over $100,000 for compared to $20,000 or $30,000, and then the rest is just profit after that. Okay, some more refinement and a few extra features, but it's a good opportunity for them, which I think is possibly why Porsche are probably going to IPO out of Volkswagen, because they can see that opportunity, and they started early with electric, and I think there's going to be their SUV out soon. I'm not sure how far away that is, but that is bound to be a really big seller too.
Yeah, and I think that's the reason why Ford is going to do fine, because after the whole financial crisis, that's exactly what they did. They cut down their model line and went, all right, what's our bread and butter? Let's stick with that, and we're going to keep on doing that. And that's what we're going to do with EVs. And they've just assumed they're going to be a smaller company, and they're going to know their audience, and they're going to sell to their consumer. And that's what they're going to do. Right, and I think Ford will be fine with that.
And even, like you say, smaller, maybe just selling 2 million vehicles a year. But now they have $5,000 profit per vehicle, equating to perhaps $10 billion net profit, which would, So, and if they're only worth 50 billion, then that's a P ratio of 5 already, if that was just that. And they need to sell 1 or 2, maybe 3 million a year to justify that. Plus, the likes of Toyota, they're probably going to be replaced with the Chinese EVs. So people who want low-cost vehicles, then I don't know how Toyota's it's going to be tough for them to compete. They're a bit late to the game, but maybe they have a chance. Maybe something will happen. They do need to do LFP sales and just have low-range vehicles probably with under 200 miles, and maybe they have a chance. They've still got a brand, but I don't know. It's tough. Volkswagen might be a bit tough for them as well. Similar scenario. Tesla's just going to be better value all around. Mercedes, they got a chance, and they know that, and they've got almost like 4 or 5 different varieties of electric SUV on the way as well. Because SUV people will pay more for as well. Same thing. If you're paying more for, you can get over that hurdle of the cost of the battery initially, which is just a fixed price for all cars. So yeah, I think Mercedes have a chance as well, and they have a target for like 200 gigawatt hours a year for batteries as well. But some legacy brands could possibly survive.
My suspicion, if I had to lay a bet down right now, I would say that whatever companies survive the next 5 years, the famous JPR 007 charts of the Valley of Death, whoever survives out of that Valley of Death will end up making it and survive as a company within whatever niche they found. But it's going to be that's going to be the they talk about the great filter for people. Elon talks about the great filter and why we need to get to Mars and get through this great filter. Carl Sagan talked about that, the first great filter of our species, and becoming a class 1 versus a class 0 civilization. For the auto industry, this next 5 years, I think we've already seen like a semi filter with a bunch of consolidations of companies like Stellantis and stuff like that. But I think the next 5 years, this Valley of Death in the automotive industry is going to be the next great filter for the auto industry, and whoever survives it will be coming out on the other side.
Yeah, I said it as soon as I saw that chart. It's whoever can produce the most is going to win, and that's it. Because going into an environment where EVs we're going to hit price parity pretty soon, and as soon as we hit that point, everybody's going to want an EV. If you're not producing one, you're not going to sell anything, and so it's whoever is producing the most is going to win. And GM thinks that their whole platform model is going to be efficient because, to Lee's point, you want to sell, 10 million or 1 million of one model. GM is thinking, well, we can sell 1 million of this platform. But there's so many other costs that go into the different toppings that go onto that platform. And that's where they're losing their efficiency.
And it would be boring if everyone drove Teslas around everywhere. It kind of would.
But yeah.
Tesla
would lose its luster if everything was a Tesla.
Not everyone wants a Tesla. Some people like different shapes and different designs and different applications as well. Like I think the F-150 Lightning they've done a really good job. They've really taken it seriously and thought about application, and they've differentiated themselves from the Cybertruck, and they have a following as well that they can continue. So I think they've done a good job on that. So there is a chance for them for all sorts of legacies to find a niche somewhere where they're not competing with Tesla, but Tesla is always going to be the lowest cost, or like literal lowest cost of manufacturing anyway. No one's going to be able to beat that like for like. So it's going to be tough to try and compete with them on price in a lot of way. However, they do have a lot of other features that people can pay more for rather than just being a lower cost brand in the market. But I don't know how, they probably are the Apple of the market, most likely, and they will always have that extra brand value. So they don't need to go and undercut everyone on price. And there's the Chinese who just don't seem to care about profit, and are willing to just sell at hardly any profit, and with basic cars with low range. But again, their range, remember they have these LFP cells, right? And they're getting around 220 miles or so of range, but that's they do still degrade, and probably 10% after maybe 50,000 miles. So then you're down to about 200 miles of range, and that's just what the figures are. The EPA range, real case range would be lower probably, but then that's also for a sedan, a lower weight vehicle. And that's when the weather's good. So if you take it into colder climates, when you're going to lose another 50 miles of range or something there again, which is starting to get pretty low. And then what if you want it to be an SUV or a pickup truck or a luxury sedan or something like that? Then your range is just going to it's too low. It's not practical. So the Chinese can only compete on these compact and lighter sedans, maybe more compact crossovers. Sorry. So they can only niche as well, because that's with the LFP cells, and they aren't ramping up on the nickel-based ternary cells like Legacy are. They're taking that serious. Like these Ford factories, the cell factories we're seeing there, and GM, the massive amounts of billions they're spending on that. They're partnering with the right people like LG and SK Innovation to get the right energy density, because they know they've done their market research. Like Legacy, they're great at marketing, right? And they're great at market research, and they know that their customers need around 300 miles of range in the US, and that seems to be the case, and that's why Elon pulled back the standard range Model Y, because it was only about 230 miles. It wasn't suitable for the market. So they have to get that sort of range for the majority of the market, and that's what they're working on. And they've managed to get $45 rebate subsidy on every cell they make in the US from the government, and then $7,500 off the price tag to the customer. So that's how they can do it, and they've got a chance, because Tesla can't even physically make enough cars for everyone, and it's good to have a variety. A lot of people don't even want a Tesla; they want to have something different, and other people who have more money, they want people to know that, and Tesla doesn't offer them something like a Porsche does in that regard, even though the Porsche is slower than the Plaid S and all that, and twice the price almost, and has almost half the range. It's not, people just don't necessarily care about that so much.
The key is going to be them being able to produce those vehicles at a profit. Like Ford right now, I think the F-150 is great. If they can't produce at a profit, they just raised the price on it. And I wouldn't be surprised if they were a little worried about the demand it was getting, eating away at their profitable vehicle, which is the ICE F-150. If the demand, especially if the Cybertruck comes out, and tears away at the demand for the ICE F-150, which is Ford's bread and butter for their profit, and they're not making a profit on their Lightning F-150, and they don't have the battery materials and supply chain contracts to be able to produce those at volume for demand, even if a company finds a great niche, if they can't fulfill that niche profitably and make it through the valley of death, it's going to be tough.
Yeah, and to Harry's point, Farley himself said that they lose money on every EV. This is true, and looking at going into next year, if we're looking at a recession, obviously price power is going to be key, because if people aren't going to be spending as much money, then you're going to want a lesser priced vehicle. Tesla has that ability to come down on prices if they need to for demand. Meanwhile, we've got Legacy Auto that's going up on their prices. Like, obviously, the last thing you want to do in a recession is go up on your prices. So that could be really detrimental to Legacy Auto going into next year, especially if they're having to do so on their ICE vehicles too. If ICE vehicle prices are going up while Tesla's EV prices are coming down, we're going to hit price parity even sooner than we thought.
Or do we just have to forget that world we used to know, where cars were that cheap, and the future is that cars simply do cost more and fewer people buy them? And then we also have robotaxis as a reserve as well for people who can't afford them. And it's like, okay, well, that's how much cars cost. That's it. You just deal with it. That's life now. You can buy a secondhand one or whatever, used one, or you can take a robotaxi or Uber. But cars now cost this much and that's the future.
Which is really the perfect segue into a successful robotaxi business model where there's a natural decrease in demand for personally owned vehicles, but a continued demand for the need for transportation. So yeah, it just seems like it's all coming together.
Yeah, I think we're going to see a lot of things coming together, and like Mark here says, we need cyber in 2023. Semi will ramp. Insurance is going to continue to grow. FSD is getting better. Supercharging network is best in class, and then energy. And we just saw all that stuff about energy that just came out. So energy is going to be that sleeper, and we see what's going on over in Australia. Tesla's building up infrastructures for that. We're going to see stuff like that happen in Thailand. We know that in Thailand they have some energy issues that are going on over there. Tesla can solve a lot of that. We're going to see that in Indonesia. And then Tesla's going to end up hitting the ground there because people are going to see, oh, Tesla energy. Oh, it's going to almost be like Apple. I have my charger and then I have my phone. And that's literally what Tesla's going to be, but on a big scale with vehicles in a lot of these countries.
Yeah, I'll be really curious to see where their energy business, if this is a year where the energy business really shines, and if they can grow that business to a point where if there was any shortfall in the automotive demand or whatever, they could make up for it with energy business side of the house. Obviously, it's not there yet, but it's growing precipitously, and they've got all these great projects where they're literally operating as a utility now. So, this just we've all heard, you guys have spoken about it on your channels, the number of potential revenue streams and businesses that Tesla is operating in. We'll just see how much of that accretes to the bottom line this year in the recessionary year. I think for me, at least, I'm not nearly as doom and gloom about 2023 for Tesla as I've seen a lot of people being.
Energy can basically be a license to print money in the long run. Basically, they have these products that have a return on investment for anyone who has energy. It can save you money in energy. So it's like, how much is it saving? It's all relative there. Is it saving me 10%, 20%, 30%? I can pay this back in 3 years' time if I buy this. So eventually they're going to do LFP cells for your house, right? That Elon has said that, and it makes sense. It's obvious. So you can buy your own battery in your house, and obviously you buy the energy, you charge your battery when energy is cheaper, and then you use your battery when it's more expensive. It's quite simple. And it obviously saves you money because you're buffering out the supply and demand curves, right? And you flatlining it so you're a consistent rate. So it saves you money for that reason. And it's like, how much does it save? Oh, it saves me $2,000 a year, and it only costs $5,000 to buy, and then it may only cost $3,000 for Tesla to make. So therefore, every time it's just a no-brainer to buy, and they can just print as many of these as they can, and everyone's just going to save money. Everyone in the world. If that's how I kind of see energy. It's a return on investment. And other cities who need them, they have blackouts or brownouts and things. It's just it's like there's no reason to not eventually invest in the energy, like we saw in Australia, like you're saying, in South Australia.
Yeah, and going through it from a psychological standpoint from a consumer, you're looking at, we're going into recessionary times where we know that, I want to save as much money as possible. We have, inflation going up like crazy. People are living paycheck to paycheck. Where can they save money? Oh, they're going to start looking at things like Tesla Energy. I can save money by switching over to Tesla Energy. I can save money on my vehicle by buying a Tesla or an EV instead. So the entire world's going to move to that. We start looking at like distributors. We've got the semi-jet just come out. We're going to see over the next year true numbers coming out for companies. We saw it with Hertz when they went over to switch to EVs, how much money they're saving by using EVs instead. We'll see the same thing with semis. So it's not going to be about how much money it's costing the people up front. It's how much they're saving in the long run on this. And I think the whole mentality and psychology of what we're seeing now from COVID and going into a recession is going to play into that in the future.
Yeah, absolutely. And it's funny, in the comments, I love watching the comments because it's still people just so frustrated about the stock performance in relation to the company execution. Warren Buffett said it best. Warren Buffett said it best. In the short term, the market is a voting machine. In the long term, it's a weighing machine. The key for you is making sure that you've got the ability to ride out the negative voting cycles so that you can see the returns on the weighing cycles, which are always longer term than the voting cycles.
Yeah, and you've got to remember, basically, just roughly, every 10 years, there's 2 years of a bear market and 8 years of a bull market.
That's
We're
right.
just in that 2 years of a bear market. And during a bear market, that's when fortunes are born. So this is actually, a segue, because we'll close this up in a minute here. But next week, we're doing a live stream talking about just that, which is in the times we have right now, you do want to invest, but you want to do it wisely. And that cash flow generation coming in is the most important thing you can have right now. So having cost savings on whatever you're purchasing, having any return on your investments, because obviously right now you're getting zero returns on your Tesla investment, which stinks. But those are the times where if you were able to put some money into it, once we get out of this voting cycle, that's where you're going to see those returns. So it's just be patient, folks. We'll get there. So we're going to wrap this up right now. But before we go, I just want your guys' predictions. What are you looking at for deliveries for 2023?
Lee, what do you got?
I think 2.3 million should be good. But depending on how they ramp 4680s and depending on that new CATL factory, we could see 2.5. It's even possible it could be as high as 2.8. And to be honest, just depends on the ramping really. But 2.3, I'd probably lock in at a conservative guess.
Yeah, I think 2.3. Anything above 2.2 is going to be seen as 50% growth. So, 2.3 would be great. I'd be perfectly happy with that.
Yeah, for me, I'm looking at, I had it at around 2.3. I've got production at 2.3 to 2.5. And I'm almost going to play a silly game and go, whatever the run rate is for production at the end of 1 year will be the deliveries for the following year, especially if we're smoothing out the delivery waves. That's how it's going to end up happening, because we'll have that massive production push at the end of the year, which will end up going into Q1 of the following year. So I'm going to go with a 2.1 million for deliveries for next year. Very conservative on my perspective, but that's what I'm rolling with.
Hey, Tim, real quick. Positive outlook for the very near term. As of today, Elon can't sell for the next 7-something weeks. So
he cannot sell until January 30th. That will be the next time that he can sell. So
really, is that right? 30th we've got.
Yeah, because this is assuming that earnings are on January 25th, which is what we're expecting. He would not be able to sell again until the following Monday, which would be January 30th.
That's right. And
equally, that means we can't have the buyback until then either, right?
Correct.
They technically could have. I mean, I'm not saying they did, but they could have done the buyback like yesterday morning when we saw that big rise in the stock price. As long as they filed a Form 8 within 2 days of having done it.
Okay. So that means that we would see it either tonight or maybe Monday morning, depending on how they roll with SEC.
Yeah, and who knows if that's how they do. I mean, Elon.
I don't think it would look good doing a buyback while Elon's selling at all.
No,
I think that would be really
and one of the things that I'd said all along was obviously like Elon knows if and when he's going to need to sell. He talks with the board. So the board's not going to do a buyback if they know that Elon might still have to sell shares. It does not make any good business sense whatsoever.
We also have a bullish divergence on the RSI right now. So maybe now that the FOMC stuff's out of the way and the Elon selling stuff is out of the way, and with this bullish divergence, maybe we can get a little relief rally going into the end of the year.
Yeah, I just saw that, we are into the oversold range. So we're there. So we might get this little Santa Claus rally. But again, we have a very difficult macro environment. But fundamentally, we are looking at a very strong company going forward. It's just tough time to be patient with, folks. So I know it's frustrating. I do. You just got to get through it. So whatever you need to do for yourself to get through emotions and take your emotions out of this right now, you just got to do that, because that's going to be the hardest part of all of this right now. It's exactly what the market wants, is to toy with your emotions. Don't let them.
Hey, Tim, thanks for having me. Lee, I really appreciated the insight from you and the conversation. I look forward to chatting with you guys again soon.
Yes, definitely. Thank you, guys. And if you guys who are watching do not follow them, Dave is real_futurist over on Twitter. Lee, Tesla economist here on YouTube and over on Twitter. I have both of those links in the description. Dave, I know the question was asked before. You are not on YouTube, right? You don't have a channel?
Not yet, although I've thought to myself that if there was ever a time, it would be now. Help people get through the tough times. So we'll see. I might spin something up.
All right. And if you do, we'll definitely shout you out and have you back on again. So thank you guys both so much. Thank you everyone for watching as well. And we will see you all later.
Thanks, guys.
Thanks, guys.